Are we seeing a similar event as AMC and GME? Well, let's talk about it. Hey, every lucky apricot out there, my name is Sean, and this is Sean Stocks. Before we get started, I just want to say that I am not a financial advisor, so please use your own judgment and do your own due diligence on anything I talk about today. Today, we are going to again continue talking about the underdog, the lucky stock, the one and only Clov, C-L-O-V. This is my 16th video on Clov. The last video that I made was the mother of all due diligences on Clov. It actually is about 22 minutes long and has a ton of great information in there. If you want to watch that and binge watch all of my other Clov videos, there is a link in the description below to a playlist. If you appreciate my close following of Clov and want to get this video out to more people and help spread the word about Clov's momentum, all I ask is that you like this video and share it with a friend or community. Keep in mind, the more likes, the more the YouTube algorithm is likely to push out this video to more people and keep this Clov momentum going. So with that being said, let's get started. Today we saw that a new SEC filing was released by Clover Health. It is a preliminary prospectus. In this prospectus, there was a key part that I have seen before. So let's scroll down and check it out. If we scroll down to page 43 and page 44, let's scroll all the way down real quick. It's actually a little bit easier this way. There we go. So if we scroll down to page 43, it says risk related to ownership of our securities. And there it does say, we believe that recent volatility and our current market prices reflect market and trading dynamics unrelated to our underlying business or macro or industry fundamentals. And we do not know how long these dynamics will last. Under the circumstances, we caution you against investing in our Class A common stock unless you are prepared to incur the risk of losing all or substantial portion of your investment. Then scrolling down a little bit more, we do see this fun section. This section mentions that a short squeeze due to sudden increase in demand for shares of our Class A common stock that largely exceeds supply and our focused investor trading and anticipation of a potential short squeeze have led to or may be currently leading to and could again lead to extreme price volatility in shares of our Class A common stock. That is really, really exciting words because that says to us, hey, they're sending out a message to everyone saying that this stock can be pretty volatile. And so where have we seen this before, right? We have seen this before in AMC. If we scroll down to S11, and this is from, I believe, April 27, 2021. If we scroll down to S11, we can see the same words. A short squeeze due to a sudden increase in demand for shares of Class A common stock, etc. Okay? And also, we can also see something similar in the 10K form for GameStop. And so in this 10K form for GameStop, we scroll down to page 15. If we scroll down to page 15, it says a short squeeze due to sudden increase in demand for shares, etc. So, with these similarities in mind, is kind of getting exciting. Hopefully, we will see some big movement soon. Also, the links for these documents are in the description below. So let's talk about Clov's momentum and movement for Friday and today. First, on Friday, we had a short interest percentage of free float at 48.37%, which again is really high. Looking at today's numbers, we are sitting at 49.74. That is a 1.37% increase. And I actually think that is one of the highest short interest percentages of free floats that I've ever seen for this stock. These shorts just keep on doubling down. Also, the days to cover is currently sitting at 1.23 days. But both Friday and Monday were red days though. On Friday, we actually dropped 68 cents. Looking at the day chart, we can see that we opened at $12.73 and then reaching a high of $13.45. And we were above the VWAP up until 10:13 a.m. when the tides did shift, and it was a pretty bearish rest of the day with a low of $12.02 before ending off the day at 12:05. So looking at Monday charts, let's scroll right a little bit here. So looking at Monday charts, we see that we opened at $12 and $12 and about 17 cents there. $12 and about 17 cents. Throughout the entire day, we were hit pretty hard, hitting at a low of $11.16, right about at 11:09 a.m. After that, we had a bit of an uptick right until about 1:45 p.m., where we reached a total of $11.61, and then there was a downward trend. There was a downward trend where we ended the day off at $11.24. In the after hours, we actually went up a couple of cents to $11.34, which is good. You have to take your wins when you can get them, right? So the volume of the day was $32.48 million. It has seemed to stabilize around that number, about 30 million-ish, for the past couple of days. So I'm interested to see if we will get anywhere close to that 10 to 15 million amount of volume soon, which is where we were at before the run up to 28 a few weeks ago. One key point that I did notice about today and Friday is that there has been a good amount of large orders coming in for these past 2 days, which in my opinion is always a good sign. And you can see that right here in the order flow area of Webull. So you see 2.10, 3.20 right there. Next, we're going to go, of course, to my favorite place, the iBorrow desk. In the iBorrow desk, we can see that there are only 71. I repeat, only 71. That's basically zero in my opinion. 71 shares available. That is amazing. I know that on Friday we had 30,000 shares. So I'll scroll down real quick so I can show you. On Friday, which was right about here. Yep. On Friday. Yeah, right there. We had 30,000 shares. So only having 71, which is basically nothing today, is really good. Also, the fee is currently sitting at 6.5%. Please keep in mind that the stock loan fee is a fee charged by a brokerage for borrowing shares. In this case, it is expressed as an annualized percentage charged by Interactive Brokers. Next, we're going to look at the news of the day. In the news, we have some pretty amazing news, okay? Here it says that Democrats eye major Medicare expansion as part of a $6 trillion reconciliation bill. This bill potentially could include lowering Medicare eligibility from age 65 to potentially 55 or even 60, and expanding the program to cover dental work, glasses, and eye surgeries, as well as hearing aids, according to Politico, which first reported the news. As I mentioned before, decreasing the age for Medicare would be a huge positive catalyst for the stock, as it would instantly create millions of new beneficiaries. So hopefully we will see some more talk of that soon. As I mentioned before, patience is key with this play, as momentum needs to build. I'm excited to see if this week is going to be the week of a squeeze, but only time will tell. Also, I made a video, as I mentioned before, over the weekend called Mother of All Due Diligences. It's a pretty long video, so please check it out in the Clov playlist in the description below. And if you like this content and want me to continue following Clov this closely, hit the like button, share with a friend, and have a great trading day, you lucky people. Take care. Bye-bye.